So already in hindsight, I already know that this won't be the most educational video that I could make, because Monday was a really great day. We had news at 10 and we had some decent PA, some good PA, and we had a lot of really decent setups. We had a 1 minute to the downside that worked on a AM session, another on a PM session, some good break-even trades, not a lot of losses. There was a lot of opportunity. That's the thing that I want to say. Thankfully, we had a lot of opportunity, but sometimes, as I have already talked about this in another video that I've recorded previously. Sometimes we don't take the opportunities because we don't have the confidence enough in the market, or we lack some confluence that we say, maybe if I had that confluence I would take in that trade. And that's something to learn about. The trades that we don't take, the shots that we don't take, are also good because we learn them. We have the knowledge for the next trade. So we didn't take the trade because in our model, in our head, we haven't seen that type of trade with that type of confluences work a lot of times. We have seen it failing, or we don't have the confidence in it just to take it. Now that's where the bad traders and the beginners fail, because they see a setup they don't have full confidence in, they don't have the past knowledge, the screen time, and they take their setups and they take every setup. And today I think this will be a day where those type of people will win, because there was a lot of opportunity, the PA was good, and sometimes not rationalizing a lot can help. But in other days where the PA isn't that great, they will blow their accounts and that won't be great. So I don't envy them, not by a long shot. So I will just talk about the trades that I took. I will not talk about the shots that I didn't take, because they are a lot. The one thing that I want to take about the trades that I didn't took, and maybe some of you also haven't taken as well, was that you don't need to be mad about, you don't need to have FOMO about them, because the market will be here tomorrow. And you can learn from those setups. Every day is another opportunity. And sometimes you have the opportunity to make some money, you have the opportunity to win, and sometimes you have the opportunity to learn. Sometimes you lose, sometimes you don't, sometimes you don't take even any trade. But when you don't take trades, you don't need to see it as a, how can I say this? When you don't take any trades, you don't need to see it as lack of action, because when you don't take any trade, you're choosing not to take any trade, which is a really good action, and that's where the best traders have their edge, is knowing when not to take a trade. They know when to take and know when not to take. And I'm not trying to make this video some philosophical, some psychological trading methods, so I'll just talk about the trades that I took. I ended up red in a day. I made a lot of mistakes and I will explain them. So hopefully in the future I don't make them and you guys also don't. So I came to the market, I think at market open, and we have, I'll just talk about the trades. I don't really have a bias, as I already talked about. You guys could see if you had an eye on the chart. Quickly, what have I talked about a lot? Accumulation, manipulation, distribution to the downside. The market opened in distribution, and that's the only thing that you need to know, because then you don't know where to take profits. Probably the draw for you could be here, for others could be here, for others could be here. The market just stopped a lot, and here now we are just consolidating, we're chopping till the market opens. So I'll talk about the trades that I took, which were 3. I already marked them because some of them are there was so many opportunities that I can't just see there's a trade here, there's a trade here, there's a trade here, there's a trade here, there's a trade here. There's a lot of 50 seconds hidden in every one of these candles. So I'll talk about the ones that I took. Here we have a really good sweep, V-shape to the upside. The bias, we already took some sort of sell side. I'm still kind of bearish, but this would be a good break-even trade because the break-even would be here. So we went up here. I put my break-even I think here because I didn't trust really these highs. I put my break-even here, and this is where I sometimes commit a mistake because my stop loss should be something around like this. And I put my TP here because the momentum was really good. Now, because I was bearish, this was my 1 hour and I should have taken this trade. I wasn't bearish, I was unbiased, and when I am unbiased I should have taken at least a contract here, which make me almost win for the day. At least kind of break even, and take the other contract here, which should have been stopped at break even. I didn't, which made all the contracts stop at break even, and that's definitely okay. And the problem here, the mistakes that I want to talk about today, was the fact that I was shorting on MNQ. I was shorting on my phone because I looked, there were so many opportunities that I wanted to take some of them. And I was shorting on my phone because I couldn't be in my computer at the time. And I was shorting on MNQ, and that can happen. Because MNQ, the candles close at different ticks, different points. The wicks sometimes can take sell side on MNQ and don't take sell side on NQ, and you should always short on NQ. NQ is the one that rules above MNQ. And shorting on my phone, sometimes you don't see because you are in a hurry, and if you're shorting on your phone, it's kind of hard for, at least on my phone, it's kind of hard for me to be switching all time frames. And the problem here was I was in the car, I was in my phone, I had decent internet, and I was on the 15 second, and I saw all this chopping around right here. I was still kind of bearish, and I saw this LR here, right here. I was waiting for an SMT, but as I was in my phone, I can't have like two shorts like I have right here. Right here I have ES on the 15 second. I have two charts on my computer, so I can look for SMTs. The perfect thing here would be looking for an SMT. I don't know if we had them, but in the 30 second, the trade that I took was this. Let me just, where is this? Just a second. Right here. On the 15 second, we inversed this lot of momentum. The problem here is we have some of these candles that took buy side should have already ran this low resistance liquidity run. So the problem here is this is so strong that you don't know when we are going to take this LR. So you kind of need to wait for an external sweep of liquidity, or just avoid these ones, or wait for a really good trade with an SMT, the perfect momentum. And here I don't know if we're at an SMT, I won't even look for it because at the moment I wasn't looking for it, and we closed it with momentum. But the problem here was that I was shorting on my phone, and sorry that I'm kind of mad about it, because this is the type of trades that's let me end it. We didn't close on the 30 second. See, this trade wasn't even a beam. This trade should be invalid because if I was on my computer, I will wait for us to close in 30 seconds, and we didn't. So this shouldn't be a loss. This shouldn't be anything. This shouldn't be even a trade. But that's okay. I closed it, and I talked about two trades. So my rules got me at 3 trades maximum. So I will talk about the last one that I took. And now, what I want to tell you here is that please don't keep charting on your phone unless you have like a really fast, I don't know, iPhone 16 Pro Max with a big chart. And this isn't a really bad loss This isn't something I would take. This is a trade that you should just avoid and wait for something better. Just pass this trade through. The market will be here, as I said in the beginning, and the PA here wasn't better. The thing here is we are not on the kill zone. It's 12 o'clock. This isn't some hour to be trading. So I made a handful of mistakes. Trading out of the kill zone, charting on the main queue, charting on my phone where I can see the time frames, charting on the card where I don't really have my full attention out of it, and charting on the highway, which makes my internet not the best. So this is really something to be learned, and I think I had something to talk about this, but I can't really remember, so I'll pass to the next one so I don't take a lot of time. And here I came to the PM session, and the thing that I want to talk about before talking about the trade was I saw a lot of opportunities on the AM session. I was on my phone and I saw a lot of trades that, in a phone, you can't really draw the squares, the fair value caps perfectly. So you need to zoom a lot, and you don't have certainty if you have inversed. In my model, I wait for the inverse fair value gaps to be inversed, and you can't really see. And the problem was, on my phone, I saw a lot of trades played out. I saw two trades that weren't really perfect, but I know that I would have taken because I was looking at the market hoping that fair value gap inverts so I could take the trade. But on my phone, it inverts really quick, and on my computer I know I probably, or if at the point that I was on my phone, I could have said, okay, here we have an SMT, this is like an A, and on my phone I don't have that confidence. So the thing here was I saw a lot of good opportunities, and I wanted so much to take one that I forced something, and I forced that 50 second. The 50 second was really forced because of the handful of mistakes that I already talked about. And then I kind of made another mistake that I'm not mad about it, because you need to be mad when you take a trade. I know this is hard to make because when you're taking a trade you don't really think about it. And this is something to talk about in a future video, I don't know, a year from now, when I have some sort of psychological video just talking about the way that I trade and the way that I think. But you should think, I know this is hard, I myself don't even do it. I only do it when I already clicked buy or sell. But you should think that when I take this trade, and when you should be journaling every trade, no matter it's a win, a loss, or break even, you should journal every trade for the rest of your life because you need the data. Journaling is good to cement your data. If you take a trade and then you journal it, and then you look at your journal, you would like to look at the journal and say, okay, this is a good trade, a good win, a good break even. Okay, this was a loss, but I like this trade. I thought about this trade. This trade should have worked. Okay, this was this confluence here that was kind of missing, but okay, that's definitely okay. This was a good trade. That 15 second that I just showed you is a trade that I have journaled, but I don't like that trade. That trade for me is a mistake, and I will have to look at it. And that trade gives me an itch because I know that when I open my journal, I will have that a loss that I'm not happy about. That could be a loss that I say, okay, this was a good loss. It was a loss. Okay, I don't like losses, but this was a good loss. Get past it. But I will look at it. I will look at my journal. I will see the loss, and I'll be mad. And then at the end of the month, when I recap and I look at all the trades that I took in the month, I will look at that trade and I'll be mad again about it, which isn't bad. It's 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 good because it's a way for me to cement why that mistakes can't be remade. I can't make that mistakes again. Or if when making that mistakes, I need to calm myself and say, okay, you're not thinking really through this, and think twice before taking the trade in those circumstances. So it's good to have these trades journal so I can know about them. But as I said, that isn't a good trade because when I look at it, I know that I am mad about it. Now here, we have already taken a lot of sell side. And if you go on a 4 hour, this was my target. This is my draw 1 liquidity. But we have this 4-hour that was holding at a time, and I didn't know if we were going to inverse it or not. But what the things that I to talk about here are, we hope to respect some high and then inverse the fair value gap with momentum. So right here we made with the S, I won't show you because the video is already big, but with the S we have an SMT, we respected, we tapped with a lot, we tapped really quickly this fair value gap, and we went down a lot of momentum. So here I took the trade, I got filled a little bit higher, and this is another thing that I need to talk about. The stop loss should be something like this, and for the stop loss to be something like this trade will be a win, because I got filled, I think, right here, so this should be a win because it should be the 1R. Now, this trade was so quick for me. This as you can see, this is just the most V-shaped thing. Here we go up and we go straight down. This is everything happening 45 seconds, and I am looking for SMTs. I'm looking for as respecting anything. I'm looking for the fair value gap to be perfectly inverse. I'm looking for the momentum. I'm looking for so much things that I take my time. And the thing here is, I clicked sell, I got filled, but I was looking for where I should place my TP, because when I take a trade, I don't think, the first thing that I think isn't, oh, where should I put my TP? It probably should, but I am looking for, okay, if I click to sell and the trade just inverts right up, I am looking for the market to see if I'm not going to lose just quickly. So if we, as I don't have normally a hard stop, I'm looking for the market so I can see if I should just close my trade because I am losing. It didn't happen. We went down. Right here I put my stop to break even, and we kept going down, but I didn't put any of my TPs, so this trade ended up just being a break even, which is definitely fine. It's fine. And yeah, that's it for today. I will not talk about. I kind of had a lot of talk about. If I talked about all the opportunities that I saw today in the market, I will be here for about an hour. That won't happen. Maybe in another video. And that's it for today. See you guys on Tuesday, hopefully. And that's it for today. Thank you. Bye bye.